welcome back to Let's Talk All Things Internet. Today's post, we are talking about credit scores and why it's good to have a high credit score. So let's start. What are the benefits of a good credit? Well, you see, a good credit can provide a number of benefits, such as lower interest rates on loans and credit cards. Because lenders often offer better terms, such as a lower interest rate to borrowers with a good credit. If you have if you have terrible credit, they're gonna give you the worst possible loan you can get, so high interest rates and worse terms. The more loan options you can get, you borrowers with good credits have more option for loans, including mortgages and car loans. So you're in a higher bracket, you can get more offerings from the bank. You have an easier time renting an apartment or getting a job. Landlords and employers may check credit scores as part of the application process and may be more likely to approve those with a good credit. So if you have a good credit score and you're looking for an apartment, you have a better chance of getting that apartment versus someone with bad credit. You get also better insurance rate. Some insurance companies, they use credit scores to determine the rates, and those with good credits, you get offered lower rates. So same thing, if you have bad credit, they give you the worst possible rate they can. You could have ability to qualify for credit cards with rewards and perks. You have many credit cards with rewards and perks that give you that requires good credit to qualify and give you better rates and making you, a better offer for the credit card. So like if you spend, for example, if you spend, you earn more in points and you get by having a better credit score. Yeah, you have a better chance of getting approved for credit cards more quickly. Good credit holders have better chance of getting approved for their credit cards and their loans much more quicker than someone with lower score. With lower score, the bank has to go do subprime loans, or they have to go find it from other companies willing to work with high risk clients. So with good credit, it's better to have an emergency fund. Because good credit can help you to get a loan in case of an emergency. So moving on, how to build your credit. There's a lot of ways to build your credit. Some tips to build it. Get a credit card and get a credit report. So then that way, you review your credit report to understand your current credit standings and identify any errors that may be negatively affecting your score. You can request, your free credit report from each of the three major credit bureaus, such as Equifax, TransUnion, or Equifax and TransUnion. Sorry about that. Establish a credit history. If you have no credit history, consider getting a secured credit card or becoming an authorized user on a credit card. So in that way, whenever you use their credit card and they use their credit card, it also builds your credit score together. You pay your bills on time. Late payments can have a significant negative impact on your credit score. Make sure to pay all your bills on time. So that way, when the company reports it to the bureau, you're not getting a negative strike on your credit report. Keep your credit card balances low. High credit card balances can negatively impact your credit score. Try to keep your balances below 30% of your credit limit. So that way, that 30% will always keep you in the high credit score bracket instead of being over 30%, where now it affects your credit score negatively. Keep old credit accounts open. Length of your credit history is a very important factor in your credit score. Keep all old accounts open, even if you're not even using them. Don't close them down. Just keep them open, because then that way you're getting that good points from having debt to income ratio and having your utilization that is much better. Don't apply for too much of credit at once. That way, each time you apply for credit, it can have a negative impact on your credit score. Limit the number of credit applications you make, so you don't really make you don't really get into the trouble where you're having too much checks on your report. It makes it looks like you're looking for money when you don't want it to be like that. You want it to be where you're not constantly looking for money. So you want to keep it at a minimum, maybe two checks a year, unless if you're doing the free credit report from Burrell or Credit Karma. Monitor your credit report. You keep an eye on your credit score and credit report to make sure everything is accurate and to monitor your progress. And you diversify your credit. So having different types of credit, such as a credit card, mortgages, auto loan, personal loans, and etc. And help you to build your they will help you build your credit history better when you have multiple different like mortgage, auto loans, personal loans, credit cards. Those will help you build your credit. And you have to remember that building credit takes time and consistent effort. So be patient and stay on top of your credit so that you don't make mistakes and ruin your credit. Me, at one point, I did ruin my credit, but I'm on a journey of rebuilding it. So, the only way I ruined my credit is by trying to help a friend out, and the person never repaid the loan. So that ended up coming back and biting me in the butt. But other than that, you don't loan your credit card to anyone. That's for your personal use and whatnot. So moving on, how to get your credit report. There are many. There are a few ways you can get your report. You got your annual credit report. That's for free. You can get a free copy of your credit report from each of the three major credit bureaus. TransUnion, Equifax, Experian, and once a year by visiting the website annualcreditreport.com. That's if you're American. Canadian, I'm not too sure. We have too many you can go to, but we do use Credit Union or Burrell. You could check it for free, and just call up Equifax. You can check it on their website for free. You can request your report all at once or stagger them throughout the year, so that way you know exactly where you're standing with your credit. You could get directly from the credit bureau. As I mentioned, you could go directly to Equifax once a year and get a free report. You can also get a copy of your credit report directly from the credit bureaus. Equifax, Experian, and TransUnion all have websites where you can request a copy of your credit report for free. That's just once a year you can do that, and it comes directly from the source. Through a credit monitoring service. Some credit monitoring service such as Credit Karma and Burrell offer free access to your credit report and score. These services may have limitation and include ads, so it's important to read the terms and service carefully before signing up. It's also important to review your credit report regularly to ensure that all the information is accurate and to address any errors or inaccuracies that may be negatively affecting your credit score, because you don't want something that's not supposed to be on there that's showing up that's negatively affecting you, and that could prevent you from either getting a new car or getting into a mortgage or getting into an apartment or getting the best insurance rate. You don't want that to affect you. Also, what is the best credit score to have? That's a good one that a lot of people want to know. The best credit to have is generally considered to be a high credit score. A high credit score is typically in the range of 700 or above. A score in the range in this range indicates to lenders that you are a low credit risk, and they will be more likely to approve your loan or credit card application and offer you better terms such as a lower interest rate or better terms for months. There are different scoring models and ranges, but the most widely used credit scoring models are FICO and Vantage Score. Both models have a range of 300 to 850. In general, a score of 700 or above is considered good, and a score of 750 or above is considered excellent. It's important to note that having good credit is not only about the score, but also about having a positive credit history, which shows that you are responsible. That's one, responsible and repaying your debts on time, and that you have a good mix of credit. For example, credit cards, loans, mortgage, personal loans. Additionally, it's also important to keep in mind that having a good credit score and history is not a one-time thing. It needs to be maintained over time through responsible credit use. If you keep forgetting that, just a one time you spend your credit card and forget it, that's what a lot of 18-year-olds, when you first get into credit cards, the first thing you do, you just use your credit card and forget it. I did that. I'm not gonna lie, I was guilty of that, where I signed up for a credit card, $5,000 credit card. The person said, yeah, here you go, and I was like, okay. I took the credit card and I spent it, but I didn't know that I had to repay the card. So then that dinged me for a good 5 years. So I wasn't able to buy my house. So now what I end up doing, I had to end up paying it all off. So then that way I can get back into the market, because I wasn't able to get a house because I had that negative credit on my report, and that was negatively affected me. So I had to pay it off. So when you get your credit card, it's not a one-time thing. It's a constant, recurrent, every month. Once you use it, you pay it off. So the best way to do it is, you put your gas and your groceries. You know that you're gonna buy gas every month. Let's say you budget 250 a month for gas. You put 250 a month on the credit card, so then that way it's building your credit at the same time. You're paying 600 a month for groceries. You put 600 on the credit card, and you pay your groceries with your credit card. And once you get your pay for your groceries, you put it right back on your credit card. So then that way you're just keeping it recurring and it's building credit. So that's the best way to build your credit and keeping it at a high credit rating. Because if you have it under 500, then you're talking, you're gonna get bad loans, bad rates. You're just not gonna get no. You might not even get someone to qualify you. So you want to keep your score over 700. And that sums up today's post. So stay tuned for another discussion of Let's Talk All Things Internet, where we find random topics to discuss that will hopefully give you some knowledge on topics you want more information about, all while heading to work, on a drive, or home, or to the grocery store. Once again, thanks for joining. Please hit the like and subscribe button. If there's a link in the description, please hit that link. Check it out. It's to help you get a better understanding of your credit score. So hit the like and subscribe button for more content from this channel, and thanks for tuning in. Have a great day.